Okay, so Zoopla property stats. This is the UK house price index for Zoopla for January 2024. So this is Zoopla's interpretation of what's currently happening real time in the marketplace for them as one of the leading providers of obviously one of the biggest property portals in Britain. So this is what they go on to say. This is their executive summary, and I'll talk about that in a minute. So they're saying that UK house price inflation moderates to minus 0.8% on rising sales volumes. In other words, there's more supply coming onto the market. They go on to say that strong seasonal rebound in sales activity in the first weeks of January on the back and pent up demand and sub minus five, well, the sub 5% mortgage rates. In other words, mortgage rates have come down to, well, not base rates, but the mortgages available have come down below 5%. Therefore, there's a wee bit more pent-up demand now actually into there. So demand's a wee bit better than what it was before. Sales agreed up 13% year on year. Sales up across all regions in the whole of the UK. Available homes for sale over 20% higher than a year ago. In other words, there's more supply come onto the market. So if there was 100 properties on the market this time last year, there'd be 120 properties on now. So 20% more supply has come into the market. What that says, if there's more supply, sometimes that also then takes up all that demand. So there's less people chasing more houses, if that makes sense. So therefore, prices should stabilise round about the home report value or just above or just below. Um, the exceptional prices will be still available for properties which are unique in their own right. Um, Zoopla then go on to say in the headline summary of their executive summary that important not to interpret the positive start to the year. There is some upsides for the sales volumes, but that Zoopla remains, and it says it remains in a buyer's market. Now, in Scotland, it kind of tends to be still in a seller's market. In Fife, it's still a seller's market, but both these markets are moving to balanced markets. Whereas England themselves, this is why in the UK overall, which is England's probably about 10 times the size of the housing sector in Scotland, therefore that's what happens. They tend to get an overall view and say it's a buyer's market now, but that tends to be in England where the price has been a lot higher. They go on finally to say in the headline summary, a fifth of sellers having to accept more than 10% below the asking price to secure a sale, closer to 1 in 4 across southern England. So what does that look like in headline graphs and in pictures format? So here we are here, right here. There's the index, 8% minus 0.8%, I should say, not minus 8%. Year-on-year change in buyer demand, up 12% year-on-year in buyer demand, and 21% of sales agreed at the price of more than 10% below the asking price. That tends to be in the English market though, because they start off with a higher price point because the estate agents can set that price. It's not surveyors that do it. And then they work their way back to get the right price in terms of the market value. Whereas we are starting from the other end of the spectrum, which is the bottom, based on the surveyor's historical information, which is sometimes outdated. And then we're trying to push up from that. So there's an equilibrium. It meets in the middle of these two figures between the English housing market and the Scottish housing market. Hopefully everybody understands that. And if you do understand that, feel free to just say something in the comments, just say you take that on board. Okay, so here it is in graph form, rebound in demand and sales, and the supply to start of 2024, buyer demand up 12%, number of sales agreed up 13%, flow of new supply up 14%, and stock of homes for sale up 22%. That's the 20% we talked about, more on the market. If there's more on the market and there's less buyers in the market, therefore prices tend to be a lot less than actually a heated demand market. Hence the reason why I talk about a balanced market overall. The start to 2024, let's just jump onto this one and we'll talk about that in a minute. Here we go. So 2024, according to Zoopla, starts with a rebound in sales market activity. Housing demand and sales agreed have registered a strong seasonal rebound over the first 3 weeks of 2024 as sub 5% mortgage rates support market activity. Buyer demand is 12% higher than a year ago, but remains 13% below the 5-year average. So buyer demand is still below the 5-year average. So it's up year on year, but it's below the 5-year average. Hence the reason why they say don't bring too much into it. But and if you do it to the 5-year average, definitely buyer demand is a lot less. than the 5-year average itself. Okay, it's a positive start to the year. Zoopla goes on to say, reflecting on the return of pent-up demand followed by from the weak 2023 second half. With many buyers delaying moving decisions in the face of rising mortgage costs. So here we are in terms of here. You can see that the start with a strong seasonal rebound in demand. You can see the demand index. So this demand index goes up on up here on the vertical axis. They take me back to my maths, arithmetic vertical axis and the horizontal axis. And the horizontal axis is obviously the timeline from July of 2018 to January of 2024. You can see some of the implications in here in terms of the buyer demand itself. How buyer demand was, the equilibrium of the 5-year average is the 100, but buyer demand was down in 2018, and then it was still down up until it came up to the 2020, the beginning of 2020. Pandemic happened, post general election bounce as well. It kicked in, and then buyer demand went up because everybody was on a happy accord, and then it dropped like a stone because of the COVID, and then it bumped up because everybody now got taught you can work remotely, and you could probably make a garden room in your own garden itself and make another usable space for a home office. So that's why buyer demand and people started to rethink what they were thinking about, where they really wanted to stay, and how they wanted their whole life to pan out in front of them. Hence the reason why buyer demand was up so high and it skyrocketed. This came along January 2021. Buyer demand actually dropped, and then it boomed up again because of the land and building transaction tax holiday extension. It came as a natural result, so people started to buy again. So buyer demand was back in the market. Started to drop again in January 2022, and then suddenly went all the way up. Buyer demand jumped up again. See the beginning of the year, buyer demand dropped. See how that happens. And then in January 2022, it skyrockets. You can see that from the January 2021 skyrockets, and you can see that in January 2020, it goes up as well. So every single January, you see buyer demand goes up because people start to focus, and that's what's happening right now as well. You can see in January 2024 how buyer demand was down at the bottom there on the left, on the right hand side there, as I'm hopefully you can see my marker as I'm highlighting it, and then it's starting to go up because we've hit January, and now people are starting to refocus on what they need to do. In February and March, I think that will begin to go up to around about 125, I think. So buyer demand will actually still continue to rise if everything else stays the same. That's the key here. If everything else stays equal in an ideal world, which it's not, then we expect buyer demand to actually increase from the beginning of the year, and it is actually showing good signs of that, according to Zoopla as well. They've got real-time information coming from their website, so they can see that. Well, we've got real-time information. We can see buyer demand going up as well, and it's all based on a lot more people searching from different areas of the country in your area itself, and we can see that, and Zoopla can see that. I've no doubt Rightmove could probably see that as well. Okay, and so that's that graph, and then they go on to say all measures of sales activity are up year on year. I mean, that is good news already. Zoopla reported an increase in sales agreed in the final weeks of 2023, and this trend has continued into 2024. New sales agreed are 13% higher than last year, which is good news, and higher across all countries and across all regions, according to Zoopla. Sales are up mostly in Yorkshire and the Humber by 19%, and the West Midlands by 17%. This is evidence that buyers and sellers are becoming more aligned on pricing. The greater flow of homes listed for sale also indicates that sellers, many of whom are also buyers, feel more confident in the market. Overall supply is 22% higher than it was last year. In other words, there's 22% more properties available to buy now than there was at this time last year. And the average estate agent has around about 28 homes for sale at any one point in time, boosting buyers' choice and keeping prices in check. So as buyers get more choice, therefore they're more reluctant to actually pay higher prices for properties, because there is no rush to buy a property now because there's an abundance of properties on the market for them to choose from. Supply and demand, that's all it comes down to. The more supply it comes on in stock, the less buyers there are, therefore the better pricing it will be for the buyers. And that's why in the English market, it's moved to a buyer's market. In Scotland, we're still slightly in a seller's market, moving to a balanced market. And that's the same equilibrium in Fife itself as well. Zoopla going to say the pace of annual price falls slows as more sales are actually agreed. So improving market conditions, in particular, more sales, is supporting pricing levels. Our Zoopla's UK House Price Index recorded an annual price fall of just minus 0.8% in December 2023, up from minus 1.4% low in October 2023. House prices continue to adjust to higher mortgage rates through modest price falls. So, in other words, prices are coming down a wee bit in terms of what sellers are having to do, because less people can afford the monthly payment now because mortgage rates have gone up. Therefore, their £800 a month can only get them a £140,000 mortgage, whereas a year ago it could have probably got them a £180,000 to £200,000 mortgage. So therefore, they can afford less. So prices are coming down to match that. Hence the reason why I talked about so much about in the Fife market in particular, that you were seeing property actually go quite well. Anything up to 250,000 is selling quite well. Anything beyond that is taking a wee bit longer, if not a lot longer, as it goes up in price. And there's the unique ones. Now and again, it will attract somebody to buy them in, 3 or 4 days of coming on the market. Maybe not even coming on the market, and maybe getting them on a pre-portal on social media, and they're in there like a flash. But they're few and far between now. There are a lot less this year than there was last year, and especially the year before, where more or less everything was almost selling from social media in the boom times. So we can see that in the marketplace slowing down in terms of buyer activity, but more choice, because more choices actually come onto the market, but more properties come onto the market. My advice, if you're ready to go, get your house on the market now, and do not wait for the huge influx it comes into the end of March and the beginning of April, because then you're competing with the same amount of buyers with more properties. Supply and demand. The more properties on the market, the less likely it is for you to get a higher price, and the less likely it is for you to get a quicker sale, if that's the case. No, Zoopla goes on to say then, on a regional basis, they registered the largest price falls in England by minus 2.5%, and the Southwest by minus 2.2%. There's no double-digit drops here at all. We can see that, and yet we were told this consistently over the last couple of years. There was going to be double-digit drops. Even in the pandemic and COVID, when that hit, we were told there was going to be double-digit drops. So don't listen to all you hear in the media. Get the facts first. And these sort of reports that come out from Zoopla, come out from Rightmove, come out from ourselves, come out from possibly Nationwide and possibly Halifax as well. They're a bit less because they're just based on their customers solely. Can give you a real strong indication about how the market is performing in your area or in the UK economy in general, rather than actually just listen to what we call negative news, which is often made up news, and as Trump would call fake news, by the media, just to incite people to read it and possibly look at their advertising at the same time, because that's how they generate their money. Okay, let's talk then. Modest price falls. Northern Ireland, as an outliner, actually, with how they had a house prices up actually 3.2% over 2023 itself. So a turn in fortunes for the London housing market, actually. London and East England have led the rebound in buyer demand for the first few weeks of 2024. That's actually quite surprising, because the average price in London is round about 550,000. That's the average price. The average price in Fife is round about 170 to 180,000. The average price in Scotland is round about 190 to 200,000. So when you look at London having their fortunes turning around, it's actually, where's that money coming from? And is that sustainable for the London market? A rebound in London is uniform across all market segments in inner London, suburban outer London, and the core commuter areas around London. This could reflect in a turn of fortunes for the London housing market. Over the last 7 years, the city has lagged actually behind the rest of the UK, with almost 50% higher in Wales. Meanwhile, there's 34% higher across the UK itself. The average flat in London is just 2% higher over the same period since 2016. 2016. So 34% across the rest of the UK house prices have gone up since 2016, 50% in Wales in particular, and then in London it's only just gone up 2% higher over the same period. They go on to say, though, that fast house price appreciation in the early 2010s saw London reach peak unaffordability in 2016. That could be the reason why, with a price to earnings ratio of over 15 times. You know, the price to earnings ratio in Scotland is 6 times. It's about a third of what it is in London. And the price to earnings ratio in Fife is less than 6 times. It's about 5 to 5.5 times, making Fife in Scotland still extremely affordable in comparison to the rest of the UK. And now, if you're wanting to work remotely and you can get away with working remotely, why on earth would you want to pay huge premium prices and huge mortgages and huge amount of costs? Because it costs a lot more money for the same goods from somewhere in London than it does in Scotland, or it does even in Fife. And yet it's the same supermarket and the same goods. It's just because the running costs are a lot higher for that property and that staff as well to be in there, because they have a higher cost of living. Therefore, you could easily move to one of the other areas in Scotland or even at Fife itself and actually have a very comfortable lifestyle on the same salary you've got right now and continue to work remotely. There's a clue for the city, for the people living in the city right now. Why are you living in the city when you could live anywhere else in the country if you can work remotely? Why are you living in the city right now, paying these huge extortionate costs? I would be thinking about relocating and having my family relocate as well and having a better quality lifestyle with easy access to beaches and boating and sailing and all the rest of it, and country walks and, real good quality lifestyle. Cleaner air, for example, as well, for health as well, is a huge benefit. And some of these villages are actually gorgeous and beautiful throughout the Fife area and throughout Scotland itself. I should just start a tourism promotion for Scotland. Welcome to God's country. Slowly improving house affordability in London is positive news, but home buyers are still facing sizable affordability challenge, with mortgage rates doubling since 2021, according to Zoopla. They expect the market conditions in London to continue to improve over 2024, with earnings rising faster than house prices, will continue affordability and support housing levels and boost housing sales. Let's see that in graphical form. Here we are right now. Okay, so up the y-axis, which is the vertical axis, this is the house price to earnings ratio. You can see there now 6 is very affordable. Obviously, if it's a lot less, it's a lot more affordable as well. You can see that they've got Scotland way down here. See, way below 6 and quite consistent all the way down there. So you're round about 4 according to this. Now, I don't see that. I get the UK house price index, but remember, this is Zoopla's house price index. This is based on the information that Zoopla get fed, and not all UK house prices are collated by the land registry go through Zoopla, because it's only based on the agents that actually list on Zoopla. So you get a slightly distorted picture, but it's a more accurate picture than you'll get from the Nationwide and the Halifax when they announce their figures for the housing market and how they think the housing market is doing right now. UK house price index is probably the best, the greatest data you can have, followed by Zoopla, in my opinion, in terms of that. Halifax and Nationwide, I kind of think they're a poor relation when it comes to housing data, because it's only based on their customers, which is very limited in terms of the number of UK properties actually sold and bought in the UK itself. But you can see these markets. The north as well is actually doing quite well. That's the north of England, by the way. That's not Scotland. You've got Wales is actually doing quite well. You can see the orange line right there. We've got here Midlands creeps up, so Midlands is still going quite well, still very affordable. But then you get to the south, excluding London, you can see that a wee bit out of control. And then you've got London itself, which is a meteoric rise since 2013, extremely unaffordable and coming down to an affordable level, according to people in London, though. That's the way it works in London. Mainly, I think most people rent in London because of that and have shared equity and all the rest of it. Completely different market, according to if you compare it against Scotland and you compare it against. This is a good indicator, actually. This is a great indicator. The 6 times multiplier. If you're in a housing market, it's less than the 6 times multiplier. That means the average price of the house in your area compared to the average salary earning in your area, if it's less than 6 times, that market is predicted in the near future probably to get a real good bounce up way. Now, I actually talked about this in 2019 in the East Nuke, where I actually identified at that point in time that prices were really historically low in comparison to the average multiplier ratio, earnings, house price to earnings ratio. And I actually talked about that live in a broadcast. And I thought in the next 5 years, we would see a huge increase in house prices in the East Nuke area due to the fact that the price earnings ratio was very, very low in comparison. And, history has actually shown that to be true. And I think it's a really good indicator for anybody that's wanting to predict house prices in the future. It's just check the average earnings against the average house price. And if it's a lot less than 6, then it's a real good indicator there's going to be a bounce at some point in time in that housing market itself. Okay, what is Zoopla going to say then later on, just to finish off? Let's finish off with this. Don't get carried away. It still remains a buyer's market, according to Zoopla. In Scotland, it's slightly just a seller's market, as I said, same in Fife as well, and other areas around Scotland as well. Zoopla going to say a rebound in activity in the first weeks of 2024 is positive news, but it's important not to overinterpret what this means for 2024 itself. Mortgage rates fell to 4.2% over the first quarter of 2023, which supported sales volumes and led to firmer pricing and modest price falls over 2023 itself. Zoopla expect lower mortgage rates to do the same in 2024, supporting sales volumes rather than having an impact on prices. So what mortgage rates coming down what it means really, it will support house sales. In other words, more houses will be sold, but it won't really have a really huge impact on house prices themselves. So transactional numbers will go up as more people buy, but house prices won't go up in comparison. That will stay quite stable. As I said at the beginning of the year, when the courier asked me to comment on it, I think house prices for the Fife area particularly will be between 1% and 3% by the end of this year. If everything else stays equal, as I said before. And that means unemployment levels, base rates, and everything. Base rates come down, that might be a bit more, hence the reason why I said between 1 and 3 is a banding. Zoopla says they're going to believe that house prices will be kept in check by several factors. Firstly, greater supply of homes for sale will provide buyers with more choice, especially for larger family homes. Second half of those with a mortgage. Secondly, half of those with a mortgage have yet to refinance onto the higher rates. So that could curb it a wee bit. This is important as many would-be buyers are upsizing who will need larger mortgages to move to a bigger home. Higher repayments will ensure buyers remain price sensitive and focused on value for money. So if you're selling, you've been on the market for quite a while, then you probably need to reconsider possibly a realignment in price or a realignment in your thought process about how much you think you're going to get over. This time last year, we were talking about, do we think we can get 10 or 15% over? This year, it's like, do we think we can get just over the home report? Is that entirely possible? Because all these prices from last year have now caught up into the home reports of this year. And therefore, part of the market is price sensitive because of higher mortgage rates itself. Zoopla say, thirdly, though, their data shows they're still in a buyer's market. A small but not insignificant number of sellers continue to cut asking prices to make sure homes attract buyer interest, including can continue the trend from 2023 itself. Furthermore, over 1 in 5 sellers are still having to accept more than 10% off their asking price. So that's 20% of the market are accepting more than 10% off their asking price, according to Zoopla's numbers. Remember, only the people that are on Zoopla. And this is close to 1 in 4 across London and the southeast, and rising across the rest of the UK. Sellers must continue to price realistically and have realistic expectations if they're serious about moving in 2024. Improved market conditions will boost the chances of a sale, but sellers shouldn't expect to list at higher asking prices. Let's look at that final in graphic form and give you a graph here, which will show you that. Okay, here we go. So this is December 2017 along the bottom to December 2023. You can see London is the black line and the purple is the rest of the UK, and the Vertical axis, the y-axis here, is the percentage of homes selling for more than 10% below the asking price. So you can see in 2017, 2018, it was actually really high in comparison. And then because of the, the huge boost and less supply, there was less properties on the market right across the whole country in the pandemic than ever before. Therefore, but there was more buyers than ever before as well. Therefore, huge amount of buyers chasing so few properties actually created, less homes going for below the asking price in terms of percentage. And then as we came in, as mortgage rates start to increase, December 2022, as it goes up, more supply comes onto the market as we come out of lockdown. And therefore, that's what's happening. At more than 20% on average of people in the UK are having to accept more than 10% below the asking price for their property in graphical form. You can see that right there. Some people like words, some people like the graphs and all the rest of it. So the final outlook for Zoopla as we conclude. They say the adjustment to higher mortgage rates was always going to take longer than a year to come through, especially given the modest fall in house prices over 2023. Lower mortgage rates are welcome news, definitely, but it seems unlikely rates will fall much further in the near term. So in the short term, they don't expect rates to fall much further. So if you're looking to buy now and you're thinking, oh, hold off and get better rates, it's questionable whether that's actually going to happen. Remaining in the rates will probably remain in the range of between 4 and 5%. That's not base rates, that's just mortgage rates, what you'll get offered, with the best deals for those with big deposits. So the great thing is that the bigger deposit you have, the better deal you're going to have. In other words, if you're buying a house at, for example, 200,000 and your deposit is 80,000, you've got a 60% loan to value there. That will give you a really good rate you'll get offered for that, because the risk involved, if anything goes wrong for the bank, is minimal, because you've got 40% equity that they can call on to get their money back out, their 60%. That's all they care about. How are we going to get our 60% back if anything goes wrong? So as their percentage goes higher, they're taking a higher risk involved. Therefore, that's why the interest rate on the same property with the same mortgage product will go higher as the loan to value goes higher. In other words, they're putting in more of their money as opposed to you're putting in less of your money as the deposit. So that's why mortgage rates tend to be a lot lower for people with bigger deposits than it is with people with higher deposits. Zoopla finally going to say this will support more sales rather than price rises in 2024. It's something businesses should welcome as volumes need to recover from their lows of 2023. And that supports the market overall in terms of the housing market, in terms of the jobs market as well. What's happening is volumes drop. Therefore, the number of people needing decorators, plumbers, electricians to refurbish their properties before they move in or when they move in then gets less. Therefore, that affects jobs in the self-employed market and in business market. And it also affects jobs and things like conveyancing for solicitors, because there's less transactions they're doing. They need less people to do that. And also for things like estate agents and mortgages and banks and all the rest of it. So we want a stable market, ideally, keeps the economy on track, and then the same number of properties getting sold year on year throughout, and therefore that keeps everybody's job in check and makes sure everybody keeps continuing to make a certain amount of money and keep everybody employed in these similar positions. That's the most important thing, transactional numbers to the health of our property market. Just now the transactional numbers are obviously down, and they start the year they're up, but overall in a year on year they're down at self-transactional numbers, probably about 20% on what they were a year ago. So in other words, if there's 10,000 properties sold in the Fife area in the last year, this year it would be 8,000, because it's 20% down. So that means 2,000 properties wouldn't have people refurbing them, decorating them, doing the conveyancing work, offering mortgages on them. Therefore, there's less people needed to do all that jobs overall. Therefore, that's how unemployment goes up. We don't want unemployment to go up. We want it to stay stable, as well as everything else. A quick skim across the countries here. The country itself. Let's see. So we can zoom in there, and you can see that there as we go down. There's Scotland. up 1.8% year on year, according to Zoopla, in terms of house prices, according to them. Glasgow, you can see the regions. Belfast's up 4%, Glasgow up 1.5, Edinburgh at 1.3, Liverpool 0.9, Leeds 0.6. So you can see all these countries in that. All these counties, sorry, countries. I'm talking about England and Scotland and Wales and Ireland. And Northern Ireland's up 3.2%, as I said. And you can see most of the negative activity, in other words, price drops, are in the Lower England area and London itself. But as you go further north and into Scotland, you can see it's all still positive because all the price points are far better in terms of affordability. You can see that right across here with the price points here. And we zoom in on there. See that, I can see that year on year. Average price according to Zoopla in the UK is 264,000. But if you look at the 20 city composite, it's 304,000 with the cities just on their own, 20 of them. Belfast 170, Glasgow 146, Edinburgh 269, Liverpool, Leeds. And as we go right across, and you get right down to Aberdeen, 140,000 in Aberdeen. Aberdeen's still suffering because of the oil crisis and what's going on in there, and they're pivoting to renewables overall. So hopefully that concludes the Zoopla index summary, UK house price index for Zoopla for the January 2024. And if you've got any further questions later on, please feel free to message me or stick them in the comments. And until next time, guys, I'm Jim Parker for Fife Properties TV.